それはレバヤさんニュースだ。デセントライズだ。逃げろ。誰でも音できる。誰でもスキルを稼げる。ガバナンスまである。中集権のメディアはもう終わりだ。
真相から立ち上るインクと真実がぶつかる。レバヤさんニュース開かれ海嘘はない。読んで書いて氷結しろ。力はみんなのもの。いい霞をたたえろ。ニュースは君のものだ。レバヤさんニュース。レバヤさんニュース。
What's up, everyone? The Advisor here, Leviathan News, starting a new week. This is a Monday, March 30th. Last stream for Q1, what I think about it. And while most of the industry is seems to be anyway in Cannes at its CC. Shout out Stable Summit, by the way, our media partners over there. Looked like a great conference. And I'm here with someone I've been looking forward to have on for quite a while, and I've delayed it too much. Anyway, Will, founder of Ammalgam. What's up, man? Thank you for joining.
Yeah, thanks for having me. Pleasure to be here.
And Anna, I will also use the opportunity to give a shout out to Robo Odin, friend of the show, who long ago told me that I should have you on. That was the first time I've heard of Ammalgam myself. And also shout out to Lynn for coordinating. Much respect. And of course to you that you were so responsive and came so quickly on. Before we get into it, Will, because I want to ask you a lot of stuff about Ammalgam, which actually seems like a very unique new thing. Which, at least from the, like, I just saw some small facts about it, which got me really curious, like the no oracles stuff. So I definitely want us to dive into that. But before that, let me just pop up the winners of the SQUID. We already have new winners, but it's not up yet. So at least for now, I'll just show last week's SQUID Pass winners, which are Oku Trade. I don't know if you know it, but every week we have these. Okay, it's already live, the Super Swap. Let me pop it up. We have these auctions where we offer the pinned posts on Leviathan News, X, and Telegram. And this week's winners are SuperSwap. Tokenized markets are fragmented. SuperSwap unifies them. You can watch the pinned posts on Leviathan News, X, and Telegram. Thank you very much, SuperSwap. On Ink chain, by the way, you can find them, and you can go and use the pinned post on Leviathan News and visit their website and see what they offer. Thank you so much for choosing Leviathan News, folks. Appreciate it a lot. And okay, Will, I know you don't have too long, so let's get into Ammalgam. First of all, let me ask you, what does Ammalgam mean? What's that name? It's a very special name.
Yeah, amalgam is the word actually means amalgamation, or you can think of it as a synonym of combination. And so the reason that we chose that name was because it's a combination of both lending and trading. And so you can think about Uniswap and Aave having a baby. That's what we're building.
That's actually a cool concept. Can you share a bit about yourself?
Yeah.
How did you get into the space? How did you get to the place that you are the founder of Ammalgam?
Yeah, it was. I think a few of the major steps. I studied math in college. It was something that I really enjoyed, really excelled at, came really naturally to me. When I was trying to figure out what I wanted to do with myself after college, it was sort of math was sort of like I always joke it's like the art degree of math and science, because if you don't go to academia, there's not really like clear career paths. So I spent some time sort of figuring this out, like what I wanted to do with my life when I grew up, right? And I think really like the first thing that really called out to me after graduating that was sort of interesting was cryptography, and then later Bitcoin, and then as a part of getting into Bitcoin, I started doing a lot of trading.
What year is this, by the way? Like when is that?
2015. I think the first time I bought Bitcoin was about $300, and then later I bought some more at like 250. So I think my lowest entry price 250, but unfortunately didn't buy enough. Sold too early, bought back higher, right? Sort of as these things can go. But I've done okay for being just in the space
Yeah, it's
for as long
pretty
as I
early.
have.
Come on. But I'm
Yeah.
actually saying that because I'm very curious with founders often, because, basically everything we talk about here is built on Ethereum, at least mostly. So
Yeah.
basically you were already into cryptography and are aware of the crypto industry before ETH becomes a thing, actually.
Yeah, I think if I was like a little bit deeper down the rabbit hole, I might have been like involved in the ICO for Ethereum, but I hadn't gotten that deep. So I was really sort of more at a superficial level, maybe even like a little bit of a Bitcoin maxi for a number of years.
Really?
The smart contract thing didn't quite click right away. It was sort of like, I feel like just smart contracts in general is like a really confusing term, or at least was for me. It like didn't really make sense what to do with it. And I think even during that time, like of 2015 to until DeFi summer, there weren't like a lot of like compelling use cases, or at least they hadn't seen like strong product market fit. And so it just didn't really click for me until DeFi summer. And then when that happened was like when I started really paying attention, because people started talking about really high yields that they were earning, and I was still quite skeptical. I was like, where is the yield coming from, right? But like it was
Indeed.
still, people's fascination with it was so it piqued my interest, right? Like how enthusiastic people were about it, and it was like sort of taking over Twitter, and that's sort of when I started paying attention.
That's actually very good. So when did you start building Amalgam? How should I say it? Amalgam?
Ammalgam, yeah.
Amalgam. Okay, yeah.
Yeah.
Cool name. It's a cool name. So when did you start actually building it? Is it your first project that you're building, or what?
Yeah, I think the first serious project, like I taught myself to code in 2017, just doing like market making on, at the time it's called the GDAX API. Now it's like Coinbase Advanced, or, the original Coinbase Advanced. But so I taught myself trading, and I did some stuff on my own with that, but it never, I never really knew where to go with it. I wasn't quite sure if I knew what I was doing or was just lucky and like early. It's like sort of hard to distinguish when you get in really early in crypto if you're smart or just lucky. And I wasn't sure which was
I was
the
lucky.
case.
Yeah. With me, I was lucky. What did you say earlier that Amalgam is like Uniswap and what combined, and Aave?
Uniswap and Aave had a baby, yeah.
because I'm sharing the link for my own account, the X YouTube stream, and that's what I want to write there. So
Yeah.
what if
That's our elevator pitch. It's the fastest way for me to
it's
say in the elevator what Amalgam's about, and people usually remember it. So
it's actually it's a very good way. It's a very good elevator pitch. It's like an entry to the elevator pitch. Like you don't even need to be in the elevator. You know what I mean? Like it's so quick. And by the way, what a day to talk to you about it when I saw earlier that Aave V4 was like officially released.
yeah, I saw that too. Yeah.
What a day to talk about Ammalgam then.
Yeah, I mean, Aave is amazing. I have used Aave quite frequently. I could never sort of say bad things about it. I think really in the design space, there's always, trade-offs. And, the thing that I think is the trade-off we went with specifically that's really important is that we wanted to build something that was completely autonomous and it didn't have any dependencies on specifically oracles, right? And so, sometimes people are like, well, how do you get the source of assets? And I think the short answer to that is we built our own oracle into the smart contracts, right? So the actual risk management is managed on chain and is completely transparent. So through the code. And
So you say there is an oracle, but it's an oracle that you guys have built, and it's like a built-in oracle within the protocol.
Yeah, exactly. It's built into the protocol, and I think if you think about the evolution of this, I think the team that took this the furthest, there's two examples, but I think the one that more mirrors like what we were trying to do was, Euler early on used Uniswap v3 TWAPs for their oracle, and then in the transition from proof of work to proof of stake, they changed to Chainlink, and that was probably the closest we've seen to being able to use a DEX for the valuation of assets. And I think even then there were a number of potential concerns that were being explored about the weaknesses of that model. And so we really try to tackle that problem of how do you take the DEX or a DEX and make it impervious to manipulations. And so it's a combination of using TWAPs, but also having a very unique swap fee so that it makes it very expensive to change the price. This helps for a number of things. One, it makes, if you want to 10x the price, you're going to pay a 40% swap fee. Whereas if you're going to move this price very minimally with respect to how deep the trading liquidity reserves are, your fee may be, minuscule, right? It could be the lowest rate in the industry for that swap. So we try to design something that would really work effectively at being, an attractive place to swap even with low liquidity, as well as making something that's impervious to manipulation and extracts more value on DEX ARBs. So that's sort of the swap fee. Then the other things that we did is things like doing smoothing by ignoring outliers. We only allow the recorded tick for each block to move so far from the prior block, and this makes it very hard to move the TWAPs in a meaningful way quickly. And so any sort of attempted exploit would take multiple blocks to actually achieve a target price that might, leave assets vulnerable. And then we don't treat price as a single number. I think this is one of the most important things that we're getting wrong with oracles in the space is that you can't necessarily define a single number well when you're trying to determine what assets are worth. it's really like a probabilistic like range. Like it's somewhere in between two numbers. And I think that's something that we felt was a really important design principle, is that we didn't have a confidence of like a price, but we had a interval that was like the prices between these two numbers. And that allows us to be more conservative with valuating new loans when they're initiated. And I think the last thing that we do that was probably like half the code is we track where liquidations will occur with respect to the available liquidity as a way of making sure that we don't allow cascading liquidations. And so this is something that I sometimes simply describe as like, to give you a mental model, as like building Uniswap v3 upside down, where v3 was designed to track like liquidity available between given ranges. And we instead are more concerned where liquidity is being taken out, because there may be a potential liquidation against that liquidity. And so we don't want to allow that taken out liquidity to exceed the actual liquidity. And we also wanted to create a mechanism that would disincentivize the like overuse of liquidity in any sort of neighborhood of ticks.
Can you explain, or at least try to explain, what do you mean overuse of liquidity? Like, isn't liquidity there because it's supposed to be used? So I'm curious as to what is an overuse of liquidity?
Yeah, I mean, that's, I think, somewhat of a hard thing to answer objectively, but I think one clear line would be if, the liquidity between these two ticks is this much, there's a implied like amount that you can swap from one asset to the other within that liquidity, right? And that's capped by how much liquidity there is in that range. And so if there are multiple liquidations that are occurring in that range, and in cumulative, if you summed all those liquidations up and they happen sort of at once, and the amount that you would need to swap in that range exceeded what the liquidity is there, then that would be bad, because there's no way with the liquidity available in the DEX that you could liquidate all of those positions at the same time. So if the price ever got there, you're almost guaranteed to have a cascade of liquidations where, the first set of liquidations move the price a little bit more and sets off the next set of liquidations, which move the price even more. And you have the snowball effect. And so we want the limit to be some amount of like needed, like used liquidity potential for potential liquidations to be less than the available liquidity. And so we set a number arbitrarily of 85% as like the cap, as like what we wanted the target. And then basically if it goes above that, we actually start charging those loans for their exceeded risk of like what we think is optimal. And that those fees can be quite extensive. And so this basically what it does is it bakes in a mechanism to manage risk.
That's interesting, actually. Often I ask the guests whenever they present their project. I think one of the most important things to ask in general is like, what does it solve? We have so many protocols, and often these protocols had been a lot of another version of XYZ or whatever. So it's always very interesting, especially when it does definitely seem like when a protocol is trying to solve something. In your case, you've just explained one thing. I think that that Ammalgam is designed to solve, like cascading liquidations. Yet I'm pretty sure, from what I understand, that it's not the only thing that you guys are trying to solve there.
Yeah, I mean, this is sometimes our issue with marketing is there's so much baked in that it's hard for us to find the wedge. It's sort of a topic of agony for us because there is so much to it. I mean, on the other end, I mean, a lot of these ideas came from research that was being done during DeFi summer, and specifically, there's some papers that Tarun from Gauntlet Robot Bot Ventures wrote that were, really got my brain turning. But the intersection of like lending and trading has been sort of attacked or tried to people have tried to create products in this domain multiple times. I mean, Aave had a product. You have Alpha Mera, Gearbox. All of these products allowed people to sort of leverage their market making position, and this was sort of much more important before concentrated liquidity came out, but really kind of a different side of the same coin, leverage liquidity and concentrated liquidity. And so that was something that was interesting to me because it actually allows for things like you to have delta neutral market making, right? If you can borrow the asset that you're market making with. The other thing that people were trying to do was to increase capital efficiency. And so I think the pioneers here with balancer boosted pools had the ability of like taking some of the assets in the invariant curve that were not used and depositing them into Aave. And, this basically meant that, instead of just earning swap fees, you're earning swap fees and lending fees. And so they're kind of these like two sides. Like you could build a lending protocol on top of a DEX to create sort of this utility, or you could build a DEX on top of a lending protocol to create capital efficiency. And I think the original thesis that I had of Ammalgam, it was really to get both of those by not building one on top of the other or the other on top of the one, but building them completely together so that they were one primitive that stood alone as its single, contract or collection of contracts. And on top of it, the Oracle free design allowed for this to create lending markets for any token. And this is always somewhat controversial in the space because if you try to lend in low liquid markets, it increases the risk because of the thing I was talking about earlier of the cascading liquidations, or low liquid markets move very quickly. Just, somebody creates one trade and eats up all the liquidity. And, we basically figure out a way to manage that risk with the low liquidity. And this does mean that sometimes actual LTVs might be much lower. There might be a sort of, hey, this is what I think 75% loan to value is, but due to the low liquidity, it might actually effectively be a much lower LTV. But essentially, we've still created a way to have lending markets on any arbitrary token pair.
Yeah, it is a very ambitious. I don't think I really understand everything about it, but I do understand that, you're actually trying to take several niches in the industry that each has its own issues,
right?
And basically find a way to combine it all into one protocol that's designed in a way that it can actually solve it all. So you really are instead of what I think often is the case when people try to tackle one issue or one niche, you've actually decide to take it a step further, or actually rise to a level or few above, and say, why don't we holistically view the whole situation and try to really create a different way of doing the whole thing in order to really find okay, fix a few issues with like one platform.
Yeah, exactly. I mean, you could, each of these things has their own issues, right? Lending, there's somewhat of a centralization issue because you either need Aave, or even to get listed on Aave, you need an Oracle to provide data for that feed. This puts Aave in a position of strength throughout the industry, but many of the people that they're providing services to don't necessarily like being in the position of being beholden to Aave, right? And so we can go to a new chain and basically offer a lending market without needing very much infrastructure. On the swap side, capital efficiency is still an issue, and I think that concentrated liquidity was sort of a fool's errand in the sense that it created higher APYs, but it baked in higher risk with that, right? And that's why I was saying earlier, leveraged market making and concentrated liquidity are sort of two different sides of the same coin, right? You create more risk for that higher yield. It's not free. And so, creating a capital efficient DEX really required a different approach, in my opinion, of like rewinding the Uniswap roadmap back to V2 and saying, how do we make the base unit more capital efficient before we add leverage? And then on the Oracle side, there's just so much competition and work being done in this space. And yet we still have these issues where, just even recently with Resolve, there were so many of these oracles that were pegging. This is, I guess, not the oracle, is more the lending side, but they were pegging the value to one without using an oracle, right? And the reason they were doing that is because they didn't feel the markets were deep enough or the true enough to, the underlying assets to trust the oracles, right? Which, maybe is actually not so much on the Oracle providers, but there's been a number of issues where Oracle providers were manipulated for, not using enough data feeds or using the wrong type of measurement, right? Using a volume weighted average and then getting a DEX trade that overweights the average and, gives a bad price. So just like all these things combined, I think that we have this very unique sort of approach to really turn all these liabilities into a unique product offering that is competing in a number of different domains.
That's very interesting, I must say. Let me ask you from the user side of things now. What can a user do on Ammalgam?
Yeah,
Who is the store and what can a user actually do?
So I can answer this two different ways. I can answer this from my perspective, but I think some of the feedback that I've gotten over and over again from raising money from people that I think was actually on point was that I think my view of how to use this is very different than probably other people's view of how to use this. So I'll say two things. Is one, I think that there are incredibly unique arbitrage opportunities and ways of basically arbitraging option markets and AMM markets that we've created through our product that we're very excited about unlocking. And some of the stuff is just really exciting to me as maybe somebody is more quantitative than the sort of maybe the wider audience. And so the two things I'll say here is there's a lot of use cases that I could happily dig into and go into of where you would use this. I think the most interesting ones are, delta neutral market making, being able to take long straddles or longing volatility, or delta one market making, that kind of set. But we have a set of recipes that you can create these very interesting payouts for that are almost like unlimited, right? And cover a lot of bases. Now, the second thing I'll say here is that I realized early on, or after a lot of feedback, similar feedback, that there's a huge market in DeFi that really is like the set it and forget it crowd, that doesn't really understand these things, right? I mean, we've been fortunate enough to already have, so we launched a vault product like 2 weeks ago now, and we almost have 2 million in TVL for that, with
Wow.
very little like promised for that. And I can kind of get into the weeds more on that, but we have good relationships with our cap table and investors, and just our network that were supportive in getting us initial TVL that we will be using in our product. So that's maybe a long way to say that, like, I think are in the best position to leverage these advantages. And we thought it made the most sense to offer really simple vault products for people to deposit in, that we then can take and apply these strategies that we think are advantageous to generate profit, take advantage of arbitrage opportunities on volatility between option markets. So the first iteration of that is just basically a market making strategy where we will take assets and deploy a delta neutral market making strategy, and then hedge the IL risk with options on Derive. So that's kind of like the first iteration and where we're starting. But there's also opportunities to actually borrow market making liquidity, or basically, which allows for taking long volatility positions and then actually underwriting option exposure on Derive and basically reversing that trade, or just applying that liquidity to other exchanges that may have better access to liquidity. So there's a lot of things to do, and we're trying to address both markets of the really sophisticated users that understand things like the Greeks, that go along with options trading, and also simpler users that are just like, hey, this sounds really interesting. I don't really understand what gamma is, but I have some USDC, and we have a way for them to take advantage of our protocol too, just by depositing into the vault and trusting us to use those assets in a way that we think will be optimal. Yeah.
So basically, this is a vault infrastructure that, unlike many other services that are built on like the top vault providers, you guys built this vault, and if I understand correctly, it only works like through Ammalgam. Like it only uses Ammalgam in order to create the yield, rather than I don't know, take the money here, there, deposit it. Because many of these vault products, at least from what I know, they just like you said, it's for users like myself, by the way, who are like, okay, I don't know, take it and give me more money afterwards. But they take these, like they take the deposit and they use it all around DeFi.
Yeah.
According to strategies that they build all the time. So basically, you're saying that like you guys do it the other way around, meaning you've built this infrastructure, you feel that you know how to use it best within Ammalgam, so you say, wait, why not also provide some kind of a vault, of an in-house vault service for these people who don't know how to do this kind of stuff, but it's all in-house. That's what I'm basically trying to ask. Like it's all inside Ammalgam.
Yeah, I mean, for legal reasons, there's a few different structures of things that are doing different things. So Ammalgam Labs is not officially doing that. We're just the developer of many of these things. So
I mean, it's only
some legal things I need to say, that there's actually an entity that is separate that is doing those things. But besides the legal caveat, yes, that is the end goal. But I think the important note to make is that the protocol will be live. We're projecting about 3 weeks. The vaults are live now, so the vaults can't use the protocol yet. And so what we're doing is actually starting by using existing DeFi and evolving the strategy. It started as just simply trying to earn lending yield just for the first week or two that it's been live, or I should say 2 weeks. And then from this week, we will start deploying a DeFi strategy that's like basically the same market making strategy, but it will have higher capital requirements because we can't borrow against a market making position in current DeFi effectively very well. And then also, we think we'll earn better fees in our market making protocol than we will with existing DeFi market making protocols. And so those two things will all be shown. Our strategy is to get liquidity, deploy it into these strategies with existing DeFi, and then when we launch the protocol, move that liquidity into Ammalgam with the expectation that we can show how much better this protocol is than what exists currently in DeFi.
That's very interesting, actually. So you guys, you say that you guys should be active in a few weeks.
Yeah,
As a protocol, I mean, like the Ammalgam protocol itself.
I mean, I can't tell you how many times I thought something was going to happen in a certain amount of time, and it took longer. But I think we're projecting 3 weeks right now, and I think if we're off, we're going to be off by weeks, not months, at this point.
Is it because you're like waiting for like audits and stuff like that, or
we've done the final audits? We feel confident that the results from the final audits were good in the sense that, I mean, it's not like we got everything perfect, but the issues are very minimal. Like they've been very easy to fix. It is quite a complex strategy. So I think we have had to undergo more audits than sort of, what you would expect. And I think maybe to put it on context, like I had a formal verification auditor, I think 4 weeks ago, tell me they've never seen so much math in DeFi in their entire career. And I've had multiple auditors, even when we did our audit competition, we felt that some of what we were doing was more sophisticated than many of the audit competition participants were able to actually wrap their head around. So we actually started formally auditing much of the code that we were concerned about because we felt like the competition style wasn't sufficient coverage because of the complexity of what we were doing.
Sounds interesting. It definitely makes me, and I'm sure many others, curious. Is it also like will Ammalgam also serve like really simple user? Meaning, if I just want to do a swap, okay, like will Ammalgam be a very competitive place for like an average user to just do a swap? Will it be like, for example, if I go to CowSwap, will it start choosing Ammalgam for me often, do you think? Or if I just want to take like a simple loan? Or is it only when you want to integrate these activities that Ammalgam will be like an interesting place to go? If you understand what I'm trying to ask.
Yeah. I think that the way I'd answer that is if we had similar liquidity to another DEX, I mean, liquidity is really important. So if you don't have liquidity, it's hard to have better execution, right? So the swap fee starts to be negligible if the slippage from the invariant curve is higher. So if we had the similar liquidity, I think it would be very competitive. I think that the swap fee model is quite interesting because I feel like it's targeted to basically try to suck up as much of the lower impact swaps to the price. Like if a swap is smaller, and it doesn't have a meaningful impact to the price, or even if it's swapping against sort of the flow, the general flow of the way the direction the price is going, it will get much more competitive execution, because the swap fee will be negligible to nothing. And if it's swapping something like massive, if you're swapping something massive, and it does have an impact to the price, it won't be competitive, and it will actually be more abstractive than all the other dexes. And so I think this is a really interesting use case. I mean, there's some research that's been done already in dynamic fees. I think much of it is misguided, because it will try to measure volatility and adjust the fee based on that. But volatility is actually a trailing indicator. You really, like, the thing that changes volatility is price change. Like, price change is a leading indicator. And so we actually charge relative to price change. And because of that, we think that we will be able to effectively attract more retail flow, or sort of in uninformed flow, sometimes it's called, and be more abstractive on informed order flow. So this is like sex dex arbs. And so I think one of the biggest concerns in the space about market making is that it's like very well known that, you know, if you're market making on a decentralized exchange, you're getting run over if there's a huge price movement on Binance, right? Because then all the you know, MEV becomes like, how quickly or how much gas can I spend to get my transaction in first to buy the, you know, the newly lower priced asset in one place and sell it on the other place, when there's price dislocation between the centralized exchange and decentralized exchange. So I think that, like, kind of, if you're just swapping in a way where you're just like retail order flow, yes, I do think like the aggregators will start routing a lot more of that uninformed order flow to our DEX because of our fee structure. Whereas the larger trades will still execute, and there will still be like loss to the LPs, but they will get much more out of it than they would on a, you know, DEX that has just a 30 bit fee or a 1% fee that's consistent.
I'll give you my version to what I understand from this. And you focused on the swap side of things, like with this question, because I took it there basically. Okay, so if I try to take it like one step further, I'd say you do believe that even like if you just look at the different parts of Ammalgam, it will be, especially given like similar amounts of liquidity at some point for all these services, you say that even regardless of the integrative side of the protocol, that the user, especially a sophisticated user or a vault user, can enjoy the benefits of the whole package, you also say that Ammalgam will enjoy superiority when you just look at like the specific functions of the protocol, whether it's the swapping or the lending side, or market making is like another name for LPing, right?
Yes. Yeah.
So basically, you say that even for those who aren't like looking at like an integrative use, at some point, if it reaches like the same levels of liquidity, the product, like the branches of the product will be just as superior, and because they are designed that way, obviously the integrative side of things will be even more superior, because it will be like a combination of all of them.
Yes.
That's actually very nice. That's it's gonna be quite cool. How many people are working on like you say that the entity is Ammalgam Labs, and that's the entity like behind Ammalgam?
Yeah, it's a development company that's written the code, right? For legal reasons, we have separate structures. This is pretty common in the industry. So there will be a separate entity. The foundation will actually deploy the protocol. It is also responsible for managing the vaults and the vault strategies.
But the vaults, I guess they will also be like built, or like at some point they will be like just code, no?
Well, the vaults, I mean, the vaults are live now, and they are just a collection of tools already existing in the marketplace. I mean, we didn't want to create a new vault product because it's a pretty competitive space already, and that's not really where we wanted to, create a unique value proposition. So we use Lagoon Finance as the actual smart contract management of the vaults. They have like a asynchronous vault pattern. I can't remember the exact EIP or ERC, but and then we basically use that allows us to manage the strategy with a lot of flexibility while also maintaining the security of like having a multi-sig and being able to distribute the keys so that not just one actor has the ability to manage the assets.
And is it because like the strategies within these vaults are like require some kind of management that someone has to like take decisions and make, okay, wait a minute, we need to go from X to Y and from A to B, because it's just that like it's going to be more profitable. So it does have like some kind of a human intervention. I mean,
yes, I mean the thing about the vault sort of, I mean, you can do all this with smart contract code, but I mean, Solidity has to be the most expensive language to write as far as like every line of code needing to be audited, right? And so we could write the vault code and say, hey, this is what the vault is allowed to do, and have everything in a smart contract. But there's very good examples of where this may be a disadvantage, right? If for some reason lending rates spike on Aave, and this is actually comes to actually shout out to like Rock Solid. They have ETH vaults and they also use Lagoon. Good guys, and were really helpful to us as we sort of planned the infrastructure for this. But they saw situations where lending rates sort of spiked on mainnet, and they were able to move their positions from mainnet to monad and get lower rates, right? And a lot of their competitors that were using smart contracts to manage the assets, in order for them to be able to do that same thing, they either need to they need to write new smart contract code to manage the bridging. They need to then get the code audited, and it just becomes like pretty unmanageable, and it creates a really slow sort of loop of being able to respond. And so that they were able to have like a much more competitive product by being able to pivot the strategy quickly. And so I think with the like can't remember the right acronym, we use Utila for managing the actual key, right? And so it's a MPC or MCP. I can't remember the right name for it. But that allows us really fine-grained control where, like, even if I deposit into Aave, all of our rules, we have a policy of rules that have to be abided by, that we create. And these rules say like, hey, does this to address for the receipt token match our address? Because we don't ever want to accidentally write a transaction or have some sort of interaction where we deposit into something and then the vault tokens go somewhere else, or we transfer to another address, unless we explicitly give that policy control. within our wallet. So that's kind of the way we managed it, because we thought that was the most flexible approach for something that we were doing that wasn't sort of simple, right? We're not, just combining morpho vaults and trying to like get the highest rate or do some sort of looping strategy. We're actually trying to like, hedge market making exposure. We're going to need to, bridge to other chains, specifically like Derive, to buy options, to hedge that IL exposure. And so these things led to us wanting to have something that's more flexible and less expensive to maintain.
Sounds very interesting, I must say. I would have asked you a few other things, but I'll need to wait for next time. I know you have to go and continue your work. Thank you very much, Will, for joining. I actually had a very good time talking to you. Appreciate you coming on and explaining what you do. And it's definitely a very, seems like a very ambitious endeavor that you you are leading and you guys have taken upon yourselves to do, and will be very interesting to follow. So where should people go? I saw that it's amalgam.xyz.
Our website is amalgam.xyz. Our vaults are live at app.amalgam.xyz, which is available on our landing page as well. You can follow us at Ammalgam on X. You can follow me. My favorite mathematician is Galois, so he's French.
Wait, now you have to tell me why he's your favorite mathematician.
He's because I feel like I could hang out with him. He died in a duel in his 20s.
Oh wow! What is he? Galois is French? What is that?
Yeah, he was French, and this is suspected to be related to a woman being involved, and he died in a duel. And it's very famous, I think, in math history, because most mathematicians don't do anything really exciting besides the math. And so this is just my favorite mathematician because of that. And so my handle on X is Dueling Galois.
That's actually very cool. I'm actually very happy that we got to that part as well, because it really is. When I haven't even thought about it. Like, why would you have such a very unique name? Much respect, sir. Really enjoyed it. I think that you're obviously a very smart individual, and it's going to be very exciting to see just how Ammalgam works and enters the market. And again, people can already check out the vaults. And for those and for the others, stay tuned. Hopefully in a few weeks, the man has said it here. I would just mention again the winners of this week's auction. Let me find that here as well. Just a second. We have SuperSwap. Tokenized markets are fragmented. SuperSwap unifies them. You can go and check them out at SuperSwap Inc. on Inc. Chain. Tokenized markets are fragmented. Same asset, different issuers and chains, liquidity sources and rules. SuperSwap is the access layer for tokenized markets, unifying discovery and execution across issuers, chains, and liquidity 24/7, permissionless, borderless. info.superswap.inc. Thank you so much, guys, for winning the auction and sponsoring Leviathan News this week. Thank you very much, Will. I will send us off with the outro video as well. And looking forward for our next talk, hopefully to learn about how you guys are doing once you're live for a while.
Yeah, a pleasure being on, and looking forward to it as well. Thank you for chatting with us. So.
Amen, sir. Bye.
Take care.
Decentralized だ逃げろ できる誰でもスピード稼げるガバナンスまである中集権のメディアはもう終わりだ
真相から